Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you for coming on today.
Happy to be here.
Well, stocks on Wall Street were up overnight for the most part, with the exception of the Nasdaq. A lot of news there, earnings coming out, also the EU agreeing to a stimulus package. Some big swings in Korean shares today, though. What's the story in the markets?
Okay, well, the U.S. markets have been, even with the earnings reports, rather mixed and perhaps a bit lackluster this week. All the exchanges have slightly different results. Dow, after falling at the end of last week, it rose this week. S&P, it continued to rise from last week, but Nasdaq, as you just mentioned, after rising substantially on Monday, it fell slightly yesterday. Now, potentially the big news is, as you mentioned, in the European Union. They passed a new fiscal stimulus policy, but because of the way that this policy is structured, it may go beyond just plain economic policy. A lot of analysts are calling this so-called Hamiltonian moment after first U.S. Treasury Secretary Alexander Hamilton. Why this is so interesting is that, well, the European Union has a single monetary policy carried out by the European Central Bank, but the fiscal policy were all run by individual governments, so there had been a lot of coordination problems, but also it managed to sort of buffer problems in one country from problems in other countries. But with this particular stimulus package, they are forming a coordinated policy where all the members are acting together, and the way that they're financing this debt from this policy is to issue it in the name of the entire European Union rather than just one country. Now, this is a similar method that the Alexander Hamilton used in 1780s to unify the 13 individual colonies in the America into a single United States of America, not just economically, but also politically, because now all the 13 colonies had common economic issues that they need to talk about, because the debt policies had tied all 13 colonies together. And a lot of people are seeing this as perhaps a beginning of such coordinated European system where all members of European Union are going to work together on fiscal policy as well as monetary policy. But given such potential for this market, the stock markets don't seem to be taking a lot of this in consideration. The Euro 50 did rise strongly last week and this week, but FTSE, perhaps because the United Kingdom is going to go out of the European Union, had not much change this week. The Asian markets also mixed. Nikkei, it fell today. Shanghai, it continues to rise from last week. Hong Kong, slight fall today. Kospi and Kosdaq. Well, Kospi had been a roller coaster this week and last week and this week, but as you mentioned, it did fall a little bit today, but after a relatively large rise yesterday. Kosdaq, it had a small fall on Monday, but relatively large rises on Tuesday and today. So overall, Korean markets are doing well. Global markets, they seem to be in sort of a holding pattern, just going up and down, maybe on a slightly upward trend, but still no real clear trend that we can see.
Well, fascinating discussion there, Professor. But here in Korea, we've had this problem of concentrations of wealth and population in the capital area in several decades now, and the resulting inequality is becoming especially severe now. What's your take on the situation, and what can be done about it?
Okay, well, Korea is sort of an outlier, but it is following a global pattern. If you look at other countries, major metropolitan areas are growing while the smaller cities are shrinking. That's in Europe as well as the United States. But a lot of the theory that goes behind these type of urban development sees these type of changes as being inevitable. And that's because not only does larger cities have better infrastructure, roads, education, and medicine, but some of the newer industries do seem to have some kind of a economies of scope or a synergy effect. For example, if you have a strong financial sector, then you not only have a strong financial sector, but also a strong computer sector, a strong legal sector, and there's a lot of switching of people working in those sectors, working in different companies in those sectors. So it may be that because of this economies of scope, economies of scale, larger cities are bound to get larger. That means Korean a geographically balanced growth plan, which started with the Nomuyan administration, may need to change. The idea behind it was perhaps create a lot of little holes in other areas, but if you try to set up little holes elsewhere, you may not see that much of a synergy effect. The other type of cities, the innovation cities, the idea is take one industry or one set of industries, have it develop in a certain city. But again, if you have any kind of synergy effect and you take just one industry, it may not be realized. We may have to drastically think about how to proportion growth in different areas, see what certain area is good at and try to keep that strength, try to play to that strength rather than just try to replicate a lot of souls everywhere.
Well, Professor, we're almost out of time, but we've been seeing households here in Korea and businesses buying up large amounts of dollars. What's behind this demand for foreign currency?
Okay, well, it basically because the global economic financial market seems to be very nervous right now. Whenever the markets are nervous, people tend to move into safe assets, safe currencies that's mostly in dollars. We've seen this in 2008, even though the crisis then came from the United States, people still wanted dollars because it was the safest asset. And even though right now the coronavirus, one of the big centers is the United States, the same type of logic seems to be applying. So at the beginning, people wanted to keep dollars because it was a safe asset. But then because of that, Korean won depreciated, the U.S. dollar appreciated in value. So since we do not see the end of coronavirus coming anytime soon, I think people are betting that the Korean won will keep depreciating or stay at weak levels. So that's why they're moving into dollars.
All right, Professor, thank you so much for sharing your insights today. We always appreciate it.
Thank you.